Alright guys, so in this video I'm going to show you how I use stops and targets for this strategy. Now, in the pictures above, the example I'm showing you with those steps is actually a historical example. It's this example right here on the USD CAD as these, as this moves up toward the 38.2 level. Now, you might notice that this is actually a losing trade, and I did that on purpose just to show you that even good strategies have losing trades. I'm going to show you a winning trade here in a minute, but this is actually a losing trade. But let me show you how I would set my stop and target on this losing trade. Now, first of all, I'm going to set the stop loss about halfway between the fib level that you're making your entry based on, so the 38.2, and the next higher fib level or lower depending on if you're making a buy or a sell. So right in the middle here, maybe just a touch on the higher side to give me a little more room. So I'm going to put my stop loss right in the middle here, and the reason is because I want to find a good stop loss area, which I believe is in the middle there, without going too big, because the bigger the stop loss you have, the smaller your trade size is, which makes it more difficult to make a gain on the account. Okay, so my stop is going to be around that zone in the middle of that area. Now my target is typically going to be in the 2-to-1 area. So I'm going to look for a target that makes sense based on a good level that gives me about a 2-to-1 reward to risk ratio. In this case, there's a very obvious target because there's these two tails here, which provide a great support area, and I don't want to put my target below these or else it's going to hurt my chance of winning the trade. So my target's here and my stop loss is here, and you can see that if I took the entry based on this red candle, which is actually a great entry, I'm at about a 2-to-1, maybe a little less than 2-to-1 in this example, but still a greater reward than risk on a pretty high probability trade. Now, you can obviously see that I lost the trade, so it's not 100%, but still a very good trade setup. Now, what would happen is that this would come down a little bit, but eventually it would certainly come up and stop me out before getting near my target. It will continue to move, and then again I'd actually get a great setup on this tail bar right here. I do the same thing where I put my stop loss about halfway between these two levels, between the 50 and the 61.8 on this next entry, and I put my stop loss probably about right here in the bottom of this range because this is a pretty good level to target. And you can see that on this one, I would actually very easily win this trade, and I'd be out with a net profit based on the two combinations of these trades. But the moral of the story here is about how to set your stops and targets. Again, I do want to let you know that there's winners and losers, and the key to being profitable is to allow your winners to be larger than your losers at the end of the month or at the end of the year, whatever the time zone that you are considering your track record over. The key is to have bigger winners over that period of time. But the moral of this video is about how to set your stops and targets. So let me clarify one more time. Stops is typically going to be within the middle of the two Fibonacci zones, the one that you're targeting, or excuse me, the one that you're entering based on, and the next higher level, assuming you're making a sell, or the next lower level, assuming you're making a buy, and then your target is simply going to be a reasonable target based on a good level in the market. Now, one thing that's very important is that if the target is on a major level that's very close to the current price, in other words, it's a very small target, then that trade is going to be canceled. That's a filter for the trade. The next major level that you want to use as your target really should be bigger than your stop, because you always want to have a better risk to reward ratio, or a positive risk to reward ratio if you can, and that's something that I'm a firm believer in. So if there's a major level that's only a few pips away from your entry, there's no sense taking the trade because there's not enough profit potential to justify taking risk on the trade. Okay, so that in short is how to set your stops and targets using this long-term trend continuation strategy. Hope that is clear and helpful, and if not, please leave a comment and I will certainly come back, make a new video and clarify anything that needs more. Okay?